It's about that time of day again. Boy, that weekend flies by. Goes by way too fast. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday already. I know, May 18th, 2015. Kicking off this fourth week of the month of May with your nightly newsletter. Before we jump into our newsletter, and it's a pretty important one tonight, we've only got a couple days this week. We got a Memorial Day weekend coming right around the corner. I hope you're excited. I know I'm pretty excited for it, but we got some work to do. We got to make some money so we can pay for all the barbecues and all the parties we're flowing over the weekend. So let's take a look here. First, before we jump into charts here tonight, I do want to remind you everything I'm going to talk about tonight, I teach it to all of our students here at schooloftrade.com. Head over to schooloftrade.com, grab our free trial. You'll love what you see there. We'll talk more about that in just a moment. Also, I want to make sure you guys are watching this video on our trading blog over here at sidewaysmarkets.com. 3 reasons why you should be watching this video over on our trading blog. 1, you can download all the charts from today's video. That's right. All the charts in today's video will be conveniently located right below the video. That way you can use those tomorrow. Number 2, we've got a free pass for you. If you'd like to come out and test drive our live trade room, if you're curious, what does it feel like to be a member here at School of Trade? If you're not a member of School of Trade and you'd like to check out our live trade room on a trial basis, I've got a free pass for you as part of our free trial. Go out and give me your name and your email address, upper left-hand corner, and then lower left-hand corner, we have a nightly newsletter mailing list. All I need is your name and your email address, and I'll add your name and email to our nightly newsletter mailing list right about 8 p.m. Eastern Time, Monday through Thursday evening when we send out that newsletter. That way you never have to worry about missing another newsletter ever again. All right, guys? So make sure you download today's charts below the video. Use those for tomorrow. Grab your free pass to come out and attend my trade room tomorrow as a guest, and register for your nightly newsletter mailing list. That way you never miss another newsletter again. All right, I think we're ready to go here. First of 4 this week, kicking off the week here. Boy, we nailed last week. Last week was an incredible week. Had a great week in the trade room. Had a great week on the newsletter. Beautiful, beautiful weather here in Los Angeles this time of year, man. I can't complain. I can't complain. And we got Memorial Day weekend to kick off a summer coming right around the corner. Again, 4 days this week, Monday through Thursday. Friday's going to be pretty much a wash. And then, of course, you got Monday off. So, short week, and I can almost smell the barbecue grill warming up already. So, let's get right at it. Here's the Euro futures, the 6E. As you can see here, Euro is bullish this evening. Euro bullish in the long term, but cycling off the channel highs with a short-term bear channel, which will likely result in prices trying to push down to those lows of this long-term channel. We can see additional range expansion support down at 1235, where we will easily get our best buying opportunities near these channel lows. Okay, let's talk about this. 2 important things. 1, you can see this long-term bull channel. If you recall, last week, we were watching this bull run last week. Remember that? We talked about the undershoot, right? Remember that? Boy, we really nailed that last week, right back up. Beautiful call last week in the newsletter. Now we're cycling off that channel high, and we see here, so of course, again, long-term channel tells me I'm bullish. I definitely want to be erring on the side of the bull side right now. Trying to trade short, a little bit more aggressive than trying to stay patient and wait for the long opportunities here on the euro. We know, though, that this bear channel is telling us in the short term we've got some sellers involved. Blame it on Greece, blame it on the dollar, whatever you want to blame it on. I trust nothing but the chart, and I see lower lows and lower highs in the short term. Usually when we see a good-looking channel like this, and it's a handsome devil, this channel. It's a very good-looking, well-behaved, just got a haircut, I'm sure, right? Very well put-together channel. Okay, and we know that when we see a channel this looking this nice and tidy, usually they're going to get shaken out a little bit, but they'll try to run this thing down here, right, on a, well, we'll look for a measured move, right? So we'll look for a measured move to finish off those sellers right this week. How long will it take? I don't know, right? Maybe it's tomorrow, maybe it's the following day. We'll have to wait and see. But looking at that, though, looking at this bear channel short term, and knowing that we have a bull channel in the long term, And guys, you don't need to be a student of mine to know this, right? What do we do with a bull channel? We buy. Where do we buy? At the low, right? So we're trying to buy the low of this bull channel. That's where we're going to get the easy money. That's where we get the most reward, right, for the least amount of risk, right? Think about down here, right? What if we bought the low of that channel? All of the reward, just a little bit of risk down there, right? So it's a good risk reward buying the low of that channel. That's what we're going to be shooting for this week on the euro. How it gets down there to be determined right now. We're going to see what it looks like. But again, if I had to guess right now, I would say we got a measured move, push me down to these lows, and then we'll look for it. Maybe it happens tomorrow. Maybe it happens the next day. But keep an eye on the low of that bull channel. How about another little clue here? Well, I snuck this little guy in here right towards the end of my analysis this evening, and I thought, okay, got to make sure we mention this. Get some flat moving averages, triple bottom, double top, right? Take that trading range here. Take that little trading range. It's a cute little guy. And then let's project it down, right? Where does that put us? 1235. It's just a simple 100% range expansion. It's a very, very simple technical analysis, range expansion support. Remember, guys, very few of us use things that haven't been used for centuries. It's just we're using them in a more current fashion, right? So I use a lot of the same proven techniques that were passed down by our forefathers, right? Dow, Gann, Mr. Fibonacci, right? All of these important technical analysis tools, but we apply them to today's markets, right? And we use new ways of using them, right? Yeah, kind of like the fashion industry, kind of like the automobile industry. The trading industry is very, very similar, right? Where we are reusing ideas from the past, but making them work in today's markets. It really is a fantastic business, this day trading thing we got going on here, right? Bottom line, long-term bull channel, short-term bear channel, and we have this trading range. I'll tell you, I'm definitely looking good here around this 1235 area, right? Range expansion, right? Take out that trading range, break out the expansion. That puts us at 1235. Look for a measured move down to these lows, and then we'll be looking to buy those lows. What if price goes higher? Right? What if price goes higher? Well, if it goes higher right now, you are coming off of this 1304, 1264, right? This trigger zone, right? Smack in the middle there. So we know there is going to be some short-term buying opportunities. Maybe we go a little bit higher than I have illustrated here. But if you're a bull right now on the euro, and again, I think being a bull right now is the best long-term solution. Option number one is going to be with this little trading range here, fake break at that low, right back up. That makes a lot of sense to me. So I definitely would be looking for buying opportunities on the way up. And I've got targets here waiting for us, targets back up at the high of that channel. If we're unable to make that run higher, though, that's where we're going to get these bears coming in. Look for that measured move down, and then we'll look to buy it again down at this support level. So option one, off of the races, buying right now. Really, you're right above that 1304, right, 1264 area. So you do have the green light right now to be a buyer, but don't be surprised, though, if we see these buyers try and fail and have this price comes back down. And again, this is where you really want to be looking for those tasty buying opportunities here on the euro right down at that bull channel low. So short-term buying opportunities, long-term buying opportunities. If you want to be a bear right now, you've really got to be careful because it's an obvious long-term bull trend. So careful if you're a bear right now, and if you're a bull, just make sure if you're going to look for the buying opportunities right now, you get at them quickly here because 1304 is major support. I really don't want to be trying to get long after we get up in here, right, 1371. I already want to be in a position by the time I get up there, just because you've got so much resistance here waiting for you overhead. So buyers in the short term, get to it now. Buyers long term, you know where I'm looking. You know where I'm looking here for the euro. I think we got a pretty good plan for that 6E. How about the GC, the gold futures, the yellow metal, this crazy cat? Boy, what a crazy month it's been on the gold, jumping back above 1200. What do we got here, gold? Bullish, yeah, just a little bit. Trading inside multiple bull channels, long-term and short-term. And we made a new high in today's session. So we're looking for buying opportunities up to, there's a measured move resistance overhead. Kind of had to read between the lines there. There's a measured move resistance overhead right there at 37.4. But you'll notice real quickly, so we know what our job is, right? Follow that trend, be a buyer right now. So where should we be buying? Well, we want to buy at support. We want to buy at a discounted price. That leads me right into this big clue. And these undershoots, well, I'll tell you, if you're not looking for them, they'll slip right through your fingers, and they're really good clues. That undershoot of that high tells me there's a little bit of weakness here, right? There's definitely a little bit of weakness. We're bullish. Don't get me wrong, we're not bearish, but there's a little bit of weakness for whatever reason that may be, right? Maybe they're getting their holiday plans, getting the troops lined up here for this weekend's party on the beach. Well, who knows, right? But we do know that there's a channel undershoot of that high. That undershoot of the high, remember we talked about it last week. This is exactly what we did all week last week. We used the undershoots to plan the overshoots. Well, you know what happens next, right? So we're expecting to see this price pull back off this high a little bit. So I'm looking for buying opportunities at 12.21.3. I really like this 12.15 area because that undershoot will probably have price pull back a little bit further. I really like this 12.15 area because you'll notice here we got that channel midline. Remember last Thursday night I told you guys to watch out for those midlines? It's exactly what happened, right? We had a great week last week in the newsletter. Really knocked it out the park. So we got that midline again, right? That's one reason. We have the undershoot support, which is a little bit discretionary right now. It's always a little bit difficult to know exactly where the undershoot support will be. If you remember, you know what I'm talking about, until we break the low, right? So if we end up going higher here, then there's no undershoot at all. But if we just roll over and go down, right, go lower, then you can pretty much bet on that 15.2 going to at least be a major area of support. Whether or not it holds or not, I've got to wait to see just like you do, right? So again, looking for price to come down, tag that 15.2 area. We get a trigger zone at 15.2. We get an undershoot support at 15.2. And then, of course, we have a swing level here at 12 even. So this whole area right here really becomes a really nice area of support. Multiple areas lining up on top of each other. And if you look a little bit closer too, you'll see, well, maybe I guess look a little bit farther out. Look left is what I should have said. You get a definite reversal line here. I didn't put it on there because it was just a little bit too much to have on that chart, but as if we need one more reason, right, there's another reversal line there that could also be used as support. Undershoot tells us, buyers, stay patient out there right now. If we do jump right here, though, right, if overnight, if we just jump going higher, that's enough information for me to know whatever wasn't there earlier today is there now. So if we just jump higher, you can pretty much bet on the fact that we're going to get up to that measured move here. I will always look for proof in the form of a price pattern to enter into a trade. You know, we'll buy some pullbacks if we start going higher here, wave pattern long, breakout patterns long. So if we just jump up here, right, and start pushing higher on some strength, then we know whatever we were lacking here earlier clearly isn't a problem right now. But what I'm talking about, though, is during this pullback, right, we expect to get a deeper pullback. Keep an eye on that 12.15.2 area, down to that 12 even area. And again, you know, what I always say is as we move lower, the easiest way to get long on this is going to be to wait for the sellers to try twice and fail. It's always going to be the easiest way to buy when price is moving down is going to be to look for the sellers to try and fail. If you want to be a little bit more conservative, you can wait for the buyers to fend off those sellers, wait for the turn, and then find your price patterns going up with that trend. So either it's going to be a seller failure or a reversal pattern long, or the last resort will be to wait for price to make the turn and then boop, buy those dips on the way up. And you've got some good targets waiting for you guys overhead. That 1245.6, that's a golden ratio target off a very, very long-term chart. So I would imagine 45.6. And this is gold we're talking about. Remember, this is not crude. It's very easy for gold to move $10 in a day. So don't forget, we can easily make that jump up there to 24, 34, 44, right? That won't be a big deal at all here for the yellow metal, all right? Stay to the bull side right now. Keep looking for the buys here on gold. But again, unless we just take off to the upside here, I would imagine stay patient here, waiting for those buying opportunities at those support levels, especially 15.2. If you're a bear right now, you get a very short period of time here, but you're going counter trend. If you're a bear right now in the yellow metal on gold, you better get to it fast because we do expect an undershoot of that low. So we do expect this to go lower, but you better get to it real quickly here and make sure you use those support levels for our targets. All right, wrapping up the Monday evening newsletter with some crude oil. What are we going to do with this thing, man? What are we going to do with this chart? Look at this chart. I know, you might want to get the kids out of the room for this one. This one's getting a little bit ugly. They may have nightmares on this one. All kidding aside here, we did roll over to the 715 contract. Remember we talked about it last week. We didn't really know when it would roll over. It was about 50-50 on Friday. Finally today we got the rollover. And that's just something you got to deal with on crude oil, right? You know, we give it the benefit of the doubt because we know how well crude oil treats us every day in our trade room. So love trading crude. Yeah, it's got a monthly rollover, so you do gotta be careful with it. But what I always tell people is think about it this way: if crude oil had a quarterly rollover, you'd have more fund managers trading it. Remember, that's the big deal, right? If you're a fund manager trying to manage a monthly rollover, yuck, right? Makes me nauseous just thinking about thousands of accounts, right? Ugh, right? It's just horrible idea. So trying to manage rollover, it's a good thing for us day traders that we have a monthly rollover because it keeps it spicy, right? It keeps the market churning through it. You're not going to have the big whales like you see in the bond market or the S&P, right? It gives us that little bit less liquidity, which helps to make this puppy move, right? One of the beautiful things about trading crude, and of course, the fear and greed that plays in is just so easy sometimes to see it coming a mile away. Bottom line though here, what are we doing here? What's our plan on crude, boy? We roll over to the 715 and all hell breaks loose. Look at this chart. Now, don't forget, we do have a big long-term bullish channel here right now on crude. So just to indulge just a little bit here, here's a more long-term look, right, of this crude. So don't confuse this. We are definitely still on the bull side right now. We just can't quite get it out of neutral here at this time. So you can see we're definitely in a bit of a consolidation period right now, right? Maybe you call it a flag or a pennant, right? Whatever you want to call it here, potato, patootie. And we know that we definitely have that long-term bull trend on the crude right now. So there's no doubt about it. The odds are going to be better being a bull at the lows of this range. So here's our plan. Get to the point, JJ. Here's our plan. Crude oil trading in the middle of a price wedge this evening. Our plan has to be to buy the lows and sell the highs and stay away from the middle. Stay away from basically right where we are right now. This is going to be the hardest place to be trading, right around this 60-40 area. 60-40 was a really popular number today. We saw it really just rattling around that 60-40 area for a while this morning in our trade room. Clearly something is out there around that 60-40, 60-30 area right now. Okay? Stay away from the middle. To get the easiest trading opportunities, you're going to want to wait for price to go up and sell it back down. Wait for price to go down and buy it back up. That's going to be the best, the easiest money you're going to make right now. Talking about risk-reward ratio, it's also a great way to balance risk and reward because when you look at it in this way, Price goes down to the lows. I'm going to buy those lows. I get all that room, and I don't need a lot of risk on that trade. Lots of reward potential, only a little bit of risk potential. So it's really got a good risk-reward ratio when you stay patient. Stay away from the middle of this range, though. That's going to be the hardest part for us on crude right now, is really you're going to get the best long-term trades here at those lows. And then, of course, in the medium term, you can sell the highs, buy the lows, just stay the heck away from the middle. Here's what I'd be looking for. If you want to know what professionals will be doing with this market right now, they're looking for traps. When I see a sideways 200 moving average, that's a little red line there, right? The 200 EMA, the BMT as we like to call it. Makes me hungry just thinking about it. But we know, though, that when it's flat like this, professional traders are looking for traps at the lows. They're looking for bear traps at the lows. They're looking for bull traps at the highs. Basically, you're waiting for price to go down to the lows. And just like I always say, what's the easiest way to be a buyer as price is going down to those lows? For seller failure, right? Sell once, sell twice, couldn't do it, buy it. What's the easiest way to make a profit going short as the price goes up to these highs? Try once for the buyers, try twice from the buyers. They can't do it, sell it short. So they're looking for traps, looking for seller failure at the lows, looking for buyer failure at the highs, right? Bear traps at the lows, bull traps at the highs. We'll be trading all this tomorrow in real time, by the way, in our trade room. Remember, you're not alone out there in your trading career. Careful on this one. Careful right now on crude, though. Today was a really touch-and-go morning session. It really didn't go anywhere in the afternoon. Rollover is now behind us. Tomorrow, we're most likely going to see this thing start to grow a better pulse tomorrow. If we don't, though, be very careful right in that middle. Be very careful, okay? Do not try to be a hero. And if we do make a run for it, you'll notice here, A, B, C, D, and I'll definitely be looking to buy that 58.20. A, B, C, D. I'll definitely be looking to sell that 62.50, okay? You know, give or take a tick or two up there. But definitely the best, the easiest money right now is going to be to let some other poor sucker try to sell these lows, and when they fail, we'll buy it back up. Let some other poor sucker try to buy these highs. When they fail, we'll sell it right back down. Use the moving averages as targets. Look for buyer failure at the high, seller failure at the low. That's about all we need to. That's all we need to worry about right now on crude. Don't overcomplicate this. Don't try to find trading opportunities right smack in the middle, because I mean, just look at this stuff. I mean, look at this junk over here. Does that look like something you can make some easy money on? I don't know, unless you're playing tennis or ping pong back and forth between that trading range. So stick to the plan here. Oh, and by the way, how about a plan? I know you guys are alone right now watching this video with me here, but you're not alone in your trading career. So don't forget, come out and see me tomorrow. We open up our live trade room here for students at 8 a.m. Eastern Time. We got one of the best free trials in the business. We do more for our students on a free trial for free $99 than you're going to get anywhere else you got to pay money for on the internet. I can pretty much guarantee you that. We got beginner, intermediate, and advanced levels of membership, and we got someone standing by 24/7 to answer all your questions. I better save my voice for the rest of this week here. Guys and gals, awesome job today. Had a great session today with our students in the trade room. Kicking off another week of our nightly newsletter. Be here with me Monday through Thursday at 8 p.m. Eastern Time. Don't be bashful. It's okay if you share this information with a friend. I'll see you tomorrow either on the free trial or as a brand new advanced member in our trade room. Shall we do it again? 23 hours from now, we'll do it again. We'll see you tomorrow night as well. Next newsletter tomorrow, Tuesday night. Don't forget to make those plans for Memorial Day. Don't forget, Friday's a half day, Monday's a holiday. My name is Joseph. We'll see you in the mañana. Adios, amigos. Bye for now.